You are missing out on the biggest financial plot twist in stock market history. Gamestop, the company everyone thought died back in 2021, just dropped an explosive earnings report that caught Wall Street completely off guard, shattered all financial expectations, and revealed a massive $9.7 billion war chest that CEO Ryan Cohen is currently weaponizing to launch a hostile $56 billion corporate takeover of eBay. If you want to know how a failing mall video game store suddenly gathered enough cash to build a massive tech empire and terrify institutional short sellers, you need to hear these numbers right now. To understand why institutional investors are panicking, look at the consensus estimates that analysts put out just weeks ago. Wall Street projected a conservative adjusted earnings per share between 11 and 16 cents. Instead, GameStop blew those expectations away by posting an adjusted EPS of 30 cents. They pulled in a jaw-dropping net income of $389.6 million, officially marking the highest quarterly net income in GameStop's history. To put that in perspective, their operating income hit an all-time first-quarter high of $143.3 million, completely erasing a $10.8 million operating loss from the exact same period last year's. But the real story isn't just that they made money. It is the massive pivot in how they made it. The traditional business of selling physical discs and game consoles is actively declining. Instead, the entire growth engine of the company was carried by their collectibles segment, including high-end trading cards, apparel, and toys, which skyrocketed to $348.9 million. Collectibles now make up nearly 42% of GameStop's entire revenue stream. Combine that massive sales shift with Ryan Cohen's absolute iron grip on corporate waste, which slashed general and administrative expenses down by more than $26 million, and you have a lean, highly profitable machine. And then, they dropped the cash bazooka. Simultaneously with the earnings report, GameStop's board of directors unanimously approved a brand new, massive $2 billion discretionary share repurchase program running all the way through June of 2029. This completely replaces their outdated buyback plan from 2019 and serves as an incredibly powerful warning shot to anyone attempting to short the stock, signaling absolute board confidence. But that $2 billion buyback plan is just a fraction of the liquid leverage they have right now. Thanks to historic equity sales executed during previous market surges, GameStop closed out the quarter, sitting on a mind-blowing liquidity pool of $9.7 billion. Which brings us to the ultimate shockwave: Ryan Cohen's highly aggressive corporate raid. GameStop has officially launched an audacious $56 billion takeover proposal to buy out eBay at $125 per share, split right down the middle between cash and stock. eBay's board immediately rejected the offer, calling it neither credible nor attractive due to financing leverage concerns. But Ryan Cohen isn't backing down. He bypassed their board entirely, quietly increased GameStop's economic stake in eBay to 6.55%, and is actively urging his own shareholders to approve a massive increase in GME's authorized share count. Cohen's goal is to turn GameStop's physical stores into drop-off, intake, and live commerce fulfillment hubs for eBay, creating a legitimate, physical competitor to Amazon. But here is the real secret you need to watch out for if you are tracking this volatility. While GameStop's survival risk is officially dead due to that $9.7 billion cash hoard, a hostile corporate acquisition of this scale is incredibly risky. If the retail crowd approves the share increase, Ryan Cohen will have the unchecked equity power to bypass boards and force a hostile merger. But if the legal battles stall out or the collectibles market cools down, the market's focus will shift right back to the declining core video game business. The pieces on the board are moving incredibly fast, and the next few months will decide if GameStop successfully transforms into a tech and logistics empire or faces a massive reality check. The baseline narrative around retail investing is shifting completely, and if you want to see exactly how GameStop's massive cash position matches up against other legacy retail giants trying to survive the e-commerce wave, click on this next video right here, where we break down the entire retail sector's balance sheets.